Hi, I'm your podcast host, Marilyn Wilkinson, and I'm excited to have a very special guest joining me today. Daniel Batten is a climate tech investor, environmental campaigner, Bitcoin analyst, author, and probably some more things that I'm forgetting. Daniel, awesome to have you here. Can you say a few words about your path up to this point, how you got into climate tech, and how you fell down the crypto rabbit hole?
Yeah, sure. Thanks for the invitation. Great to be here. So I have been involved in climate tech for about, as an investor, getting on towards 3 years through a fund. But before that, as a private investor, I've invested in technology companies since the year 2000 and spent a long time in New Zealand going around seeing some of the best climate tech ideas, deep tech ideas coming out of universities, research institutes, laboratories in the country, and saw about 300 different climate tech ideas over an 8-year period. And so it's been an area of fascination for a long time. I've been a climate campaigner for a long time, so I've loved the intersection of technology and climate activism and how you can use technology for climate activism. Having been a technology entrepreneur, there were two logical things to come together. And earlier this year, I started doing some research really out of intellectual curiosity. I had some friends who were members of Greenpeace, who were environmental campaigners who were saying, Bitcoin's terrible for the environment. And then I had some Bitcoiner friends who were saying, no, it's wonderful. It helps you to build out the renewable grid. And I was thinking, well, you can't both be right. So I'm going to do my own research and come to my own conclusions. So I did that, and I was expecting to find that maybe it was a little bit of one, a little bit of the other. The truth would be somewhere in the middle. But I could never have been prepared for what I found, because what I found was that the real story of Bitcoin's environmental potential to mitigate some of our worst and most serious emissions and to positively impact climate change, it was frankly one of the best technologies that I'd ever seen. And that's having seen a lot of climate tech. So I'm an environmentalist first and a Bitcoiner second. My role here is to see what we can do to green the grid, to mitigate methane from the air. And it just so happens that right now, Bitcoin mining is our number one candidate to be able to do that really fast on a big scale.
So I love how you did your own research and came up with your own unique and truly objective point of view, because I know exactly what you mean. You always have these two sides, and neither of which is very objective, either saying, Bitcoin is terrible for the environment, or, Bitcoin is the best thing ever. And so, the background to this interview, just for our listeners, is that I read an opinion piece of yours in Bitcoin magazine talking about how Bitcoin mining can help prevent climate change. Usually when I read about crypto and the environment, it's more of a negative angle, or as we said, the Bitcoiners just kind of denying the whole thing. But, just to throw a statistic at you, which I'm sure you've heard a lot of times before, according to the University of Cambridge, Bitcoin currently uses as much electricity in a year as Greece, Sweden, or the Netherlands. So how can Bitcoin be a good thing for the planet?
Yeah, well, it's a great question. So the first thing we have to understand is that not all uses of energy are equal, and not all consumers of energy are equal. So for example, if you are using energy and that is coming from coal, then we want to do as little of that as possible. If we're using energy and it's coming from natural gas, we want to do a whole lot less of that, but it's preferable to coal. If we're using renewable energy, hydro, solar, wind, well, that's carbon neutral, and we want to be doing more of that. So that doesn't have any long-term climate impact at all. And then if we're using a carbon negative source of energy, we actually want more of that. And so what you might think, well, what's a carbon negative source of energy? Well, a carbon negative source of energy is something that's even better than using solar and wind. Because that's only carbon neutral. That doesn't help us to eliminate emissions from the air. It just stops us putting new emissions into the air. But right now, it turns out that there is massive quantities of methane going into our atmosphere. We've had thousands of tons, even since you and I started speaking, that have gone into our atmosphere. And they're going in from oil and gas fields, from landfills, from farms, from wastewater, from any number of different sources. And it's such a big problem that the United Nations Environment Program have now switched their tack, and they're saying that mitigating methane represents our strongest lever to reduce climate change in the next 25 years. That's how serious it is. And when you look at ways that you can do that, it turns out that there aren't really a whole lot of solutions that stack up. You can try and flare it. That just means burning it, but that's very ineffective. The flares they burn it incompletely, so a lot of methane still escapes. And also it's a problem because there's no incentive. You have to regulate to make it happen. And so people push back on regulations. It's slow moving. And so what you really need is you need something that incentivizes people to remove this methane from the atmosphere. And it turns out that Bitcoin mining does a better job than anything else because it's location agnostic. It can actually sit inside an oil field and mitigate methane. It can sit next to a landfill and draw that methane that's leaching into the atmosphere, purify it, send it into a generator, use that generator to generate electricity, and use that electricity to power up Bitcoin mining. Now, what it's done in that whole process is it's taken methane, which is 84 times more powerful as a greenhouse gas than carbon dioxide, and it's removed it. That's methane that would have gone into the atmosphere that is no longer going into the atmosphere. So it's combusting it into carbon dioxide. Now, of course, carbon dioxide is still a greenhouse gas, but the key thing here is it's 84 times less powerful than methane. So you've just removed more than 95% of the problem. And so when you are increasingly using carbon negative and carbon neutral sources of that power, it flips everything on its head. And suddenly you go, well, hang on, that energy consumption is no longer a problem. It's now the solution. In fact, now the problem becomes that actually Bitcoin mining doesn't use enough energy because as a network, it doesn't draw nearly enough power to solve our methane problems. It actually needs to use more so we can mitigate more of those sources of methane that are leaching into the atmosphere right now. There's a whole lot of benefits that it has in terms of facilitating the build out of the renewable grid as well. That's absolutely true. But where a lot of my research is focused right now is because it's such a major climate concern is how we can use Bitcoin to mitigate the methane from our atmosphere. And it does a better job than any other technology right now that exists.
So you just said something that I thought was very interesting, that, when you look at it that way, Bitcoin doesn't use enough energy. And so one thing the crypto community is talking about a lot right now is the Ethereum merge and moving to proof of stake.
Yeah.
And as a result, Ethereum should be using less energy. And, Greenpeace has a huge campaign going right now saying that a software code change would reduce Bitcoin's energy use by 99.9%. And they say switching to a low energy protocol has proven effective and uses a fraction of the energy. Ethereum is changing its code. Many others use less energy. Why isn't Bitcoin? So what's your take on that? I mean, just to kind of throw this out there, do we need a new protocol that uses even more energy, or are we fine as we are? Or would a proof of stake protocol be a good thing? Or what's your take on that?
Well, I look at it through an environmental lens, and I look at it through the lens of how we can solve our most urgent climate problems. And right now, the most urgent one is mitigating methane and building out the grid to replace carbon-based sources with renewable sources. But if you look at it in terms of methane mitigation purely, the merge of Ethereum and the migration to proof of stake is terrible for the environment. Because what that means is now we've just lost our second best technology in the world that could have mitigated huge quantities of methane that are going unchecked into our atmosphere every single second. The net impact of the Ethereum merge is equivalent to burning 1.5 billion trees every single year. in terms of the potential we could have had to mitigate that methane that we've just now lost. And Ethereum was running at about 70%, changes sometimes a bit more, sometimes a bit less, of the energy capacity of Bitcoin. So we've now lost that. We've now lost the ability of what was a brilliant system, which shared the location agnostic features, the interruptible features, the fact that it offered monetary incentives, the fact that it was flexible, and we've lost that. So environmentally, it's a shocker. It has a devastating impact.
That's really interesting because most sources say that the Ethereum merge will be a net positive for the environment. And so where is this disconnect coming from, do you think?
Well, the disconnect is that that's only true if you look at energy consumption in a very one-dimensional lens, which is energy consumption is always bad. So if you think energy consumption is bad per se, so less energy consumption is good and more energy consumption is bad, through that one-dimensional lens, and you say, yeah, we need to reduce consumption. But remember, consuming energy where you are being net carbon negative, that's a positive thing. So the reason that it is devastating for the environment is you've lost a potential to combust methane, to use that methane to power up what could have been Ethereum-based crypto mining, and to run a whole series of mobile mining units which were doing proof of work based Ethereum mining. Now that it's migrated to proof of stake, it's only going to be using a very fraction of the energy, so it's no longer a solution. You can no longer use those things in landfills. You can no longer use it for wastewater. Those sources of methane now have to find someone else. And it's up to Bitcoin alone now as really the only real proof of work based cryptocurrency of any significance to find those sources of methane and to mitigate them. So the reason there's such a disconnect is that it's an unsophisticated way to look at the environment, and it's an unsophisticated way to look at energy consumption.
I see. Interesting. So I'm going to jump now to ESG because when I was digging into your background, I noticed that you wear a lot of different hats. And ESG stands for, environmental, social, and governance. And I believe there are a set of standards that investors use to evaluate potential investments. And this is something that large companies look at.
Yeah.
So, how does Bitcoin fit into that? And I mean, could crypto be considered a green investment, or could it maybe be so in the future?
Yeah, there's a number of ways that you can make Bitcoin fit within an ESG mandate. One way is that you are making sure that your sources of investment are tied to people who are doing mining, which is using renewable sources or carbon negative sources. That's number one. The second way is when the entire Bitcoin network itself becomes carbon neutral. And so there will be a flipping point at some point in the not too distant future where, because the renewable proportion of the Bitcoin network has increased so much, and because it's increasing using carbon negative sources of energy, where it actually becomes carbon neutral as an entire network, which would be amazing because there's no other monetary system in the world that's achieved that, and there's very few technologies in the world that have achieved that. In the meantime, there's a number of different ways, and you can look at these techniques which have been devised even as I speak, but the bottom line is it's incredibly possible to consider it part of an ESG investment, both now and in the future. Yeah.
Interesting. And so you touched a bit on Bitcoin and using renewable energy. Could you talk a bit more about that?
Yeah. So when it comes to renewable energy, there's two really important things. And the first is that when you look at the constraints on the growth of renewables onto the grid, two major things. Number one is getting more solar and wind and finding homes for them. And these solar and wind customers are utterly dependent upon getting their first customer. And typically they have to wait. In the US, it's an average of 3.7 years to get onto the grid, which, as you can imagine, is not good for business. And it's also not good for the greening of the grid. So one of the reasons that they struggle to get on, well, there's a few reasons, but one of them is that they don't get financial backing. And the reason, if you follow that train, the reason they don't get financial backing is because they don't have a first customer. And so it becomes chicken and egg. They can't get onto the grid because they don't have a first customer. They can't get a first customer because they're not on the grid. So Bitcoin mining provides a way out for them where they don't even have to be on the grid, and they can immediately start having a customer who can take some of their generation capacity before they get on the grid. Now, in order to do that, you have to be co-located where the solar station is or where the wind farm is. And as you can imagine, you can't do that with hospitals. You can't do that with residential housing. Normally, these places are somewhere where land is very cheap, which is typically not where there's any infrastructure. So again, the location agnostic features of Bitcoin make it perfect to become that first customer. And then you have a positive flow-on effect. So now they have a first customer. Because they have their first customer, then when they go to get financing, they're more likely to get financed because the first question that financier is going to ask is, well, who's your customer? And now, rather than say, well, we don't have any, but one day we will when we get onto the grid, they can say, well, here's our customer and here's what they're paying and here's our wholesale electricity agreement with them. And the financier looks at that, does the maths and works out, okay, that's great, because now the numbers and the equations are different and it makes sense for me to back you because it's not a lottery about how long it'll take you to get onto the grid and whether you'll get onto the grid. So that's the first thing. It helps to find a home for solar and wind operators. It increases the chances of getting onto the grid, and it increases their profitability, and those profits get reinvested into building out those solar and wind farms. And there's a second reason that it's really good. And the second reason is that if you talk to the utilities, the grid operators, and you get people telling their candid perspectives, you very quickly realize that every 10% of additional renewable capacity that goes onto the grid makes it more and more and more challenging to maintain the stability of the grid. And that's because what's happened is you've gone from sources of generation such as coal and gas, which are fossil fuels, but they are things you can ramp up or down. You can say to a coal plant or a gas plant, can you please increase your capacity? Can you please decrease your capacity? They can respond. You can't ask that of a solar operator. You can't say, can you create more sun? Can you create more wind? It's not possible. So to create stability in the grid, the only remaining option you've got is you need flexible customers. So you're going from an infrastructure where you had flexible generation, carbon intensive but flexible, and inflexible customers, to a system where now you have clean sources of energy, but they're inflexible because you can't ramp them up or down. So you need increasingly flexible customers so you can stabilize the grid. Because what happens and what a lot of people don't realize is that the grid can be unstable if you have too much demand, but it can also become unstable when you have too little demand. And so these grid operators are having to constantly manage supply and demand because you can't just store that electricity somewhere. It's sure, we've got batteries and that's part of the solution, but it's not the whole solution. Batteries can only store up to about 4 hours, and then once they're full, they're full. And if you suddenly have 92 hours of intense winds, once your battery's full, how do you store the rest of that? You can't. But what you can do is you can use Bitcoin mining as it's like the suspension. So it can pick up some of that surplus demand, and it can also help to provide stability so that any one time it can be ramped up and down. So now you're ramping up and down, not the generation, you're ramping up and down the demand. Now, again, you can't do that with hospitals. You can't do that with industry. You can't just suddenly say, can you ramp up to a steel mill? Can you use 1% less electricity? Can you use 5% less? You can give them a warning a few hours in advance that you're going to shut them down, and you can shut them down maybe for 3 hours. But after 4 hours, then the steel starts to harden. A whole lot of industrial processes start to break down. It starts to cause damage, which is permanent. So they're limited in how much flexibility they have. But again, with Bitcoin mining companies, they're the most incredibly benign and flexible customer imaginable. And so what that means is if you go right back to the grid operators, they now have a tool, a very powerful tool, which is a demand side tool not a generation side tool, which they can use to help stabilize the grid. And what that means is you can bring more renewables onto the grid without introducing exponentially more instability. So you're finding that first home for wind and solar, and then you're helping to stabilize the grid. And when demand gets too high, you can taper off Bitcoin mining. There are many, many advantages, but those would be the first two.
So basically, that means if became a point where the demand was too low, the wind farm or whatever could tell the Bitcoin mining company, "Hey guys, we're not very busy at the moment. Please take some of our excess energy." Or like, how would that work exactly?
Yeah, there's a couple of ways that it can work. So it can work for either because there's surplus wind that nobody wants, or there's say for example middle of the night, and a lot of places they're windiest in the middle of the night. Well, there's not a lot of people who want power in the middle of the night. Bitcoin miners can use it, and so rather than that energy simply being spilt, or as the grid operators say, curtailed, that can now be used. So that makes the wind operators more profitable. And again, they can reinvest those profits into building more wind farms. And then the other way it can be done is sometimes the power is generated in the wrong place. Like in Germany, for example, which have a lot of offshore wind in the north of Germany, but most of the demand is in the south of Germany. You can get congestion. So just like you get congestion on a road, you can get congestion on the grid. So you've got all this generation capacity, but it can't be transported because the grid doesn't have the necessary highway to be able to pump those electrons from the north to the south. So again, it has to be spilt. But again, if you have Bitcoin mining units who are right there on site, they can use that capacity and they can monetize that. They can be that customer that keeps the wind operators profitable. And again, they can use that to reinvest into building more wind capacity.
So I'm just wondering, like one counter argument could be that instead of soaking up the excess energy with Bitcoin, we should maybe be looking at better ways to store that energy, right? Like maybe with gravity batteries or alternatives to, lithium on-site batteries or the ways we have now of storing that energy.
Yeah, so it's not an either or, it's a both. There will be some times when batteries is the right way to do it, and there's some times when Bitcoin mining is the right way to do it. And there's sometimes when it's a constant compromise, or you're constantly switching from one to the other. And look, I'll give you an example. So if you have a battery, the problem with a battery is, so say that example where you've got surplus wind capacity. Remember, batteries only store up to 4 hours. So once they're full, if it's still windy, you can't keep on overcharging a battery once it's full. So that's where you can say, okay, my battery's full, so now I'm going to put it into Bitcoin mining. The other thing that can happen is you could charge up your battery, and then once it's full, you want to sell that capacity back to the grid. The problem is, what happens if at the time when your battery's full and you want to sell that back to the grid, what happens if your wholesale electricity prices are really low? What happens if they're negative? Well, you're going to actually lose money if the prices are negative by selling that power back to the grid. So again, you can have software that can control and tell you at a point in time whether you should use that surplus energy for batteries or whether you should use it for Bitcoin mining. And there's increasingly smart tools that will allow you to make those decisions. And the net effect of that, it'll increase the profitability of a given wind farm or solar farm from upwards of 20%, minimum 20%. The other thing with batteries is that the sheer volume, if we were to try to solve it with batteries alone, we wouldn't be able to get enough. It would be too expensive, and we'd run into some potential mineral deficiencies as well. If you look at what the International Energy Association is saying, so this is a perspective of the International Energy Agency. They're saying that to support the build out of the renewable grid, we need to increase our battery capacity about 20 times. And we also need to increase our demand response by 30 times. So in other words, we need to have more flexible customers and we need to have better ways to storage. So both need to ramp up significantly. It's not an either or. And right now, in terms of that demand response, in terms of those flexible customers, it just so happens that the location agnostic, the interruptible features of proof of work based crypto mining make it the ideal candidate.
That's super interesting. So, if it did work in this way, where more Bitcoin could be mined during times where there was a need to use up this energy, would that have an impact on Bitcoin prices? And do you think what kind of effect would that have on the crypto industry?
It wouldn't have any direct impact on Bitcoin price. It could have some indirect impacts. It would more have an immediate impact on the profitability of solar operators and wind operators. It would also have an impact on the prices that consumers would pay for electricity, because the other thing that happens on the grid is that if you're a solar operator, you often have an agreement with the utility or with the grid saying, okay, so we have energy we want to sell to you. You have the right to say no, but when they say no, they actually have to pay what's called a curtailment fee to the solar operator. And that's often written into their power purchase agreements. So when the utility is paying money to curtail energy, that means they've got to earn that money back somewhere else. And guess how they earn it back? They earn it back by charging higher electricity prices, including to retail consumers. So when, again, you have this positive domino effect, when that energy is not being curtailed, when it's been used by Bitcoin miners, that means that you don't get curtailment fees. Because you don't get curtailment fees, not only does it help the solar operator, it helps the utility. And because it helps the utility, they don't need to increase their electricity prices, and that benefits the end consumers. So it more has an impact on the price of electricity than directly the Bitcoin price. The only way that would have an impact on the Bitcoin price is that the more that this occurs, and it is increasing, I would say, at an exponential rate at the moment, because I'm in contact with a lot of Bitcoin mining companies, and a lot of the new ones are specifically looking to target renewable energy sources for a whole bunch of reasons, but primarily because it's the right thing to do and because that's where their values lead them. So as more and more people do that, then what's going to happen, and more of those stories get told, people will start to see the other side of the ledger, which is less told, the path less traveled, the story less told, which is how Bitcoin is actually helping to accelerate the renewable build out. And when that happens, people will start to get more comfortable and say, okay, sure, like any technology, it uses energy. Like any technology right now, not all of that is renewable. However, on the positive side of the ledger, it's actually doing some really good things, which we should take into consideration. So it's a little bit, the analogy I like to use is with solar panels. So if you look at solar panels, they use energy in their creation. And in fact, in solar panels' case, 100% of that energy is fossil fuel based. It comes from your melting silicon using coal furnaces. So that's a very carbon intensive process. But we don't have a problem with using solar panels, and we shouldn't have a problem using solar panels, because whilst it uses a lot of electricity, it consumes a lot of energy, and in that case, 100% carbon based. After a year and a half, it's offset that energy completely because of the fossil fuel-based sources of generation which it displaces. So it has a very high net positive benefit. And what's important when we're doing ESG accounting is we need to use the same principle. We need to look at Bitcoin and say, okay, let's understand, like any technology, it has a carbon footprint. Let's quantify that. And then let's look at the other side of the ledger. Let's quantify how much methane is it mitigating? How many renewable operations is it helping to get onto the grid that would not have got onto the grid? How many operators are now being able to reinvest into building out their farms so it goes faster? How many grid operators are now able to say yes to new renewable projects because they're not freaking out because of the instability that it introduces, because you have more flexible customers who can ramp up and down their demand as that variable renewable energy ramps up and down unpredictably. And when you look overall at those equations, you start to get a very different picture of its net energy benefit. By my calculations, we're on course that the entire Bitcoin network will be carbon neutral by the fourth quarter of 2024, which would mean that it had achieved that feat within 15 years. Now, to put that in context, into historical context, solar took 30 years to become carbon neutral. In other words, the first 30 years, its carbon footprint was bigger than the fossil fuel-based energy it was displacing. And the reason was that there wasn't that much of it, but we were producing a lot of it, and it was very expensive and very intensive in greenhouse gases to produce that solar. And for a long time, there were lots of people who said we should ban it because it didn't show a lot of promise and it was using a lot of carbon. As recently as 1994, people were saying we should ban solar for the same reason that people were saying we should ban Bitcoin. And part of what I'm here to do is to say, well, hang on a minute. We've been through this before. And when a technology shows promise, when it's showing genuine promise of being able to be a net positive contributor, when we have an evidential basis that we can quantify and start to look at real cases where it's helping to build out the renewable grid, it's helping to mitigate methane, then we need to say, let's just give it some more time. Because if it can achieve that feat in half the time that it took solar, and the rest is all, from that point on forward, it's carbon negative, that's a tremendous benefit to humanity.
And I guess the carbon footprint of other assets, like if we compare Bitcoin with gold or something, I imagine gold is a lot worse, right?
Correct. The carbon footprint is higher, and gold doesn't have that other side of the narrative. There's no way that you could argue that gold is helping to incentivize the renewable grid or that it's helping to mitigate methane, because it's not. So it doesn't have that other side of the story. Oh, sure, you could say that gold is used in solar panels and those sorts of things, but that's a little bit of a stretch. Yes, gold is required. Yes, it is used in solar panels. And yes, we need to continue to mine gold for that reason. However, do we really need it as a speculative asset? So it's a very different equation.
Right. So we've talked a bit about the ESG standards and things that, companies look at. So for investors at home, let's say I'm interested in crypto and I'm also interested in the environment and I want to invest in a green way. What are some things that I, as a normal person, can look at?
Well, there's some truly amazing things that are coming very soon. There's going to be opportunities as for retail investors very soon to be involved in helping to sponsor green Bitcoin mining. I can't say too much about what they are. All I can say is that in the next half year or so, you're going to see some really exciting innovations. The other thing is getting involved in specifically supporting or investing in mining operations that have committed to a 100% renewable vision. So at the moment, of the large, even if you want to go publicly traded, you don't have to go for private investment. Marathon has committed to go 100% renewable. It's already at 70. Its commitment is within 12 months, I believe, to go 100% renewable. They have actually exited their existing power purchase agreement, which is not a simple process because it was not renewable based, and they've formed new agreements with 100% renewable operators because they're committed to that path. And so once they've achieved that, then any shares you buy in that particular stock is going to be 100% ESG. So there are a number of different ways that you can do it. There's some things that are coming on the horizon that I can't talk too much about yet, but all I can say is there's going to be more and more opportunities for people to be selective and to exercise choice about how they contribute. The other thing I'd say is simply buying Bitcoin itself is actually an investment into helping to build out the renewable grid. Because every time you're getting Bitcoin, what is in fact happening is that's helping the network effect. It's incentivizing, obviously, the more people who are using Bitcoin, that means the Bitcoin price goes up. Because the Bitcoin price goes up, that incentivizes more mining. And because the bulk of the new mining is occurring right now, new mining is renewable based. And because that's helping to build out the grid, and because so much is, again, combusting methane, taking it out of the air permanently, then you're actually supporting that movement. You're supporting the carbon neutrality and the carbon negativity of that entire network.
And so one question just occurred to me. So the number of Bitcoins is finite, right? So what happens when we've mined all of it? What will the contribution of Bitcoin be then? Or is that so far in the future that we will have hopefully overcome the energy crisis?
It's more than 100 years in the future. And
Hmm.
It's sometime 2100 and something. I can't remember the exact date. Uh, Even after that point, though, there will still be, thankfully, there will still be a need for the Bitcoin network to use energy, because what will happen is that most of the mining revenue will then shift from being from getting a block reward for securing the network, and it'll change into validation of transactions. So that will be how the miners continue beyond that point.
Interesting. So thank you so much, Daniel. This has been super insightful. Any last words for our listeners? I think we covered a lot, though.
Yeah, look, if people are interested, then I would recommend there's a fantastic podcast which features a company called Vespine. And if you just look up podcast Vespine, you'll get to see the first-hand experience of one of these Bitcoin mining companies who is mitigating methane. And they go very deep into exactly how it's doing it and the net effect and how many trees it's equivalent of planting. If someone wants to go into the details because they think, okay, that sounds interesting, but they want to do what I did, and that's they want to go deep into the research, they can check out my website. So that's batcoins with a Z.com, where I've got some of the research papers, which is the result of talking to climate scientists and solar engineers and grid operators and energy traders and a whole range of people to start to understand how grids work and how methane mitigation works, and then presenting that back in terms of what the net numbers are in terms of the environmental impact of Bitcoin.
And so, if our listeners want to find more information about you, is the website Batcoins the right place, or is there anything else they can check out?
That's if they want to go deep into the weeds. If they just want to find out more about what I'm doing, Twitter's the best place to follow me. So that's at DS Batten.
Great. Well, thank you so much, Daniel. This has been very insightful. I know I'm thinking about Bitcoin energy consumption in a whole new way now. So, yeah, thank you very much. And maybe let's do another one in 2024 and we'll see if that prediction was accurate.
Yeah, I look forward to celebrating with you.
Thanks a lot, Daniel. Bye.